If you are a doctor or a dentist or another type of medical professional, you may be eligible for a special type of loan that allows you to buy a home with no money down. Now, since I'm not a loan officer, I will be joined shortly by Greg Acero, and we're going to talk about the specifics of this type of loan program. Greg, thank you so much for joining me. Today we're talking about physician loans, what they are, who's eligible, how to apply. So let's just jump right into it. What exactly is a physician loan?
Yeah, physician loan is a loan specifically, more or less created for the physician, an MD or someone that's a resident or a fellow or in specialty or even an established doctor. The loan was created for, some options to allow for maybe a resident or a fellow to have low down payment options, to maybe be able to get around or avoid mortgage insurance, and also has some good guidelines around student loans to help a physician maybe qualify that's in specifically residency or fellowship who's carrying a lot of student loan debt at the moment. So there's other ways to look at it where a conventional loan doesn't look at those guidelines the same, and maybe they don't qualify for that particular loan because it's conventional compared to physician loan.
Okay, so you mentioned conventional. So kind of go into a little more detail of exactly the difference between, what a conventional loan is versus a physician loan. And maybe we'll go into why a physician may want to choose one versus the other.
Yeah, good question. So the couple biggest differences between a physician loan and a conventional loan are, there's some physician loans out there that allow for 100% financing. Conventional, the lowest down payment option out there is 3%, unless you're using some sort of home buyer assistance program attached to that, which is a whole different kind of conversation, if you will. But the 100% financing is definitely a big aspect that makes a big difference between the two. With that said, a physician loan could allow for no mortgage insurance, even with 100% financing, where a conventional loan, there's going to be mortgage insurance, involved in that loan setup, either monthly or a lump sum payment to that mortgage insurance, or you avoid it altogether by doing maybe a first and second mortgage or 20% down. So those are two things that stand out right away, the difference between the two loan products themselves. And then from there, the third thing is there might be some differences in the guidelines from underwriting of how we look at certain things. For example, student loans. That's a big topic within the physician loan applicants, especially when they're in residency or fellowship and they're still having a lot of those student loans to pay on. Sometimes on conventional, they may not qualify for a conventional loan because they have substantial monthly payments on the student loan, where on the physician loan, they look at those student loans differently to allow them to qualify, where conventional just doesn't.
So if someone is interested in a physician loan, how exactly do they apply? Like, what type of documentation do they need to provide to you in order to qualify for the loan?
Yeah. So if someone's looking to get a physician loan today, step one would be, reach out to us, allow us to get your application information, which would consist of, your personal information, name, date of birth, social, address, things like that. Next would be get some employment information, where you're working today, what does that income look like, what's the structure of that income, what's the timeline of, where you're at within maybe residency or fellowship, depending on where you're at. Or if you're an established doctor, are you self-employed? Things of those questions when it comes to employment and income. We'll go over asset information as well. We'll go over their credit report and their credit, liabilities. And from there, we'll ask some general questions in regards to other real estate perhaps they own. Typical questions that we would ask for any mortgage mortgage borrowing applicant. But step one is getting that application. Step two would be getting all their documentation to support the application information. And then really step three from there was we would do more or less a one-on-one consultation together to go over all that information and then see what they qualify for, what are the financing options, and talk a little bit about what their goals and objectives are so they can move on to the final step, which is the fun part, the home shopping.
Is there any downside to doing a physician loan versus a conventional loan?
Yeah, good question on that, Ryan. What I would tell you, you know, one downside if I had to throw out there, and again, I guess with that said, I should preface it with, I think a physician loan honestly is a really good loan. I think there's a lot of upside to it, and we could dive into that further, but I just think it's a great product overall. But what are some downsides? I think one could be is a lot of times especially the 100% physician loan are adjustable rate mortgages. They're a 5-year fixed rate, and then it can adjust, or it's a 7-year fixed rate, then it can adjust, or even maybe a 10-year. The downside there is just if you want to keep that loan longer than that term, you may then need to refinance to get that into a new fixed rate of some kind. The reason the loans a lot of times are built that way is because specifically like the 100% physician loan, it's meant for a resident or a fellow that's in that beginning kind of stages who plan to buy that first home, who then once they get farther along through fellowship or specialty or become, self-employed and build their own practice, their income changes usually quite a bit. And at that time, they're looking to maybe sell that house and get a newer home. And at that time, that loan becomes irrelevant because they're getting rid of the property. And they usually do that within that 5, 7, 10-year window. And that's why the loan's kind of set up that way. However, doesn't always, be the case. And there are some options out there for a 15-year fix or 30-year fix. It just depends on what loan products we're looking at. And again, what maybe makes sense for them with their goals and their objectives.
The variable rate. So obviously, it's 5, 10 years, but if they took out a loan right now with that rate, is that variable usually about the same as a conventional loan, or is that rate usually a little higher?
Yeah, so the variable rates typically are somewhere around where the 30-year fixed rate is today or at that time. In general, okay, adjustable rates are typically a little bit less than a fixed rate, but in this particular product, the physician loan, they're around usually where the 30-year fixed rate is. So they're comparable to the marketplace. They're not out of line by any means, but they're also not super low, if you will, either, or super high. So I think they're in the right, placement as far as rates are concerned. And they do kind of tend to match always where the market's at, whatever time basis that is.
Are there any type of properties, or are there any type of restrictions that come with a physician loan, whether it be, the type of home you can buy, areas, anything like that?
Yeah, as far as the home's concerned, I've never seen any restrictions on my end in my experience with particular type of property. What I will tell you is sometimes I've seen there's a limited floor or ceiling on the amount you can borrow or the purchase price itself. In my experience, a lot of times the physician loans that I've been able to utilize before had a floor of $200,000, so that was kind of the lowest loan amount we would go with, and then they had a ceiling of usually around sometimes $1 million up to maybe $2 million of a ceiling for the amount you could borrow as well. So that's probably the number one thing that stands out. Number one, as far as property though, nothing, and I really honestly, Ryan, can't think of much. Things that as far as any difficulties from property or qualifications that stand out, really just the loan amount was the one that really kind of stood out from when I started utilizing that physician loan.
Are there any other things that a physician resident should know when, wanting to get a physician loan?
Yeah, what I would tell you, just to kind of go through from what we talked about and putting it all together, what I would say is, step one is, once you have, say, placement within, UNMC or Creighton for our local market, in that example, you have usually an offer letter and you have a start date, and you also have a pay scale that you're starting with. Once you have that information, that's the information we need to be able to now move forward with getting you qualified for a home loan. With that contract that you have a start date. The one good thing about a physician loan is it allows for future income. So if, let's say you start in July or August of, for example, 2021, and yet it's April, our present time, we can, as long as you can usually, depending on the type of loan in that physician loan we're looking at, and within what that contract says, if your income and employment starts within 60 days of the close date of the property, we can use that income even though technically it hasn't begun. And that's the, by definition, the future income, clause piece of the guideline that allows for us to get you to use that income, which is very helpful because a lot of times residents come into the marketplace from out of town, out of state, and they don't have that income starting yet, but they want to get the ball moving sooner just to get established because they know they're going to be all in within the residency program. And so they want to get all their ducks in a row. So that's a good piece of that. So again, getting that employment information, income information, getting everything taken care of, walking through what we need to qualify you, the logistics of the process, so we can have someone fully prepared to be able to get out into the marketplace and start home shopping. That's really the most important first step in this process. And then from there, through all that too, we're going to understand better what your goals and objectives are so we can best fit you with not only the right loan, but the numbers of what makes sense for you within your budget and your timeline.
Greg, thank you so much for all the information. If someone's interested in working with you, what's the best way to get in touch with you, work with you, et cetera?
Yeah, thanks, Ryan. No, hey, I really appreciate the opportunity to sit down with you and talk more about this. It's definitely something that's a need out there, and in our marketplace, I see a loan. So I really appreciate the opportunity to cover some of the details with you and help out all our physicians in our marketplace. That said, again, Greg Acero with Fairway Independent Mortgage Company, with the Greg Acero team. Best way to reach me is either phone, email, or text. My best phone number is my office number, which is 402-885-4846. That'll have you be able to reach out to not only myself, but my whole team. So that way somebody's always available to take your phone call. And then my website is gregacero.com. That's always a good place to start as well. If you submit over an application that way, once that comes over, we'll see that and we'll give you a call right away to get a meeting set up. Those are probably the two best ways to reach out and connect with us. And I would love the opportunity to always help out anybody looking just for information and advice. And again, my approach always over 16 years has been, be, of advice, be of value, and help people out understand, what a game plan is, how to best give them the information and facts they need. So at the end of the day, we can make good, decisive decisions and move forward on, good advice, good facts. And in this marketplace, we need that right now more than ever because it's a unique market and it's fast. And if we're going to get out there and, looking to buy a house, especially in that, $200,000, $300,000, $400,000 price point, it doesn't even matter what loan you necessarily have. It's about just having the right information and be willing to move fast. And I think over at our team, we understand the marketplace well, the products, everything, to put buyers in the right position to be able to get things done quickly.